When Warren Buffett, Michael Burry, David Tepper, and at least 16 other billionaire super investors all start buying the same stock that's down 52% from its peak, you need to pay attention. Today we're breaking down UnitedHealth Group, a stock that's fallen from $630 to $300, making it the worst performer in the Dow Jones this year. But here's the twist: the smartest money on the Wall Street are backing up the stock. So the first investor that we are going to analyze is the man himself, Uncle Warren. We go to Warren Buffett portfolio holding, and we see all the common names. We see Apples of the world, Bank of America, Chevron, and others. But the thing that we are mostly interested in are new buys of Warren, because it's always a signal for the market and the thing to look at. And let's be honest, Uncle Warren is usually right. So once we see a stock that Warren Buffett like piled up for $1.5 billion, that's an instant signal that we should take a deeper look into this. We see a bunch of other bets, and that's probably a topic for another video, why Warren Buffett is long on construction stocks. But UnitedHealth Group is a stock that's very interesting from the value investing perspective, and we're going to analyze it. So if we go to UnitedHealth Group stock analysis page, we see that its quality rating is pretty decent. The growth of the stock is there. The profitability and health is really good. The company is really great with capital allocation, so they deploy the capital in a very efficient way, and it had a solid momentum, not the best, but the thing we can look at the stock drawdown and see that currently it's almost 50% down from its 52-week high. And it significantly underperforms the market. So the market is up 14%, the stock is down 47% for the last year, and year to date is no better. But if we look at the historical intrinsic values, that's something that signals lots of value. We see that the stock was historically undervalued, and currently it's 105% undervalued. So there's a 2x upside if we invest right now. And this historical intrinsic value is a combination of both DCF value and relative value. So that's how Warren Buffett himself would have calculated the intrinsic value. We see that from the absolute lows, from $250, the stock actually was 155% undervalued. So that's actually a very good signal to analyze the stock even more. Another tool that can show us that United Health is really undervalued is a reverse DCF. So we can assume that we don't want to trust any growth or margin assumption, and we just simply want to look at the implied assumptions, the implied market assumptions. So the reverse DCF is a tool that can help us with it. And I prepared an analysis on UNH reverse DCF. So if we take last 12 months revenue for UNH at 420 billion, we apply a normalized free cash flow margin of 4%, which is actually very conservative considering that they had historically high was 11%. At lows that was 1.6%. Currently it's 6%. But let's assume 4. Let's be conservative. Let's assume 2% long-term growth rate and 10% discount rate, and we can see that with these assumptions, the market assumes that UNH is going to grow its revenue at 5% per annum for the next 10 years, compared to the 11% revenue CAGR for the last 3 years. So that's actually a huge mismatch of market implied assumptions and the historical growth of the company. And if we believe that there is no issue with the company from the uh, from the legal perspective, that can be value. And Warren Buffett definitely thinks the same. Um, Another super investor who is very bullish on UnitedHealth Group is the big short man, the big short guy. It's Michael Burry, and he has UNH as his top one position at 109 million. It's almost 20% of his portfolio, and his portfolio is always a mess. He buys and sells. Recently, there were some jokes on X that he became a retail investor who acts like super fast and like is not long term as he used to be. But he tries to be contrarian, and there's no other opportunity like UNH that gives you this contrarian asymmetrical bet on the market. He initiated lots of new buys, so um, he had he acquired Mercado Libre as his new buy. He had the ASML, Lululemon, so lots of new positions, and that says a lot coming from Michael Burry. He always stays contrarian, and that's also a good signal. Another thing, like we checked super investors, and their portfolios are always something to look at. But if you look at an aggregate smart money moves or hedge fund activity for UNH, we can see that 11% that there is an 11% decline from the funds holdings compared to Q1, and there are actually more fully closed positions of UNH compared to new positions. That's something interesting. So on average, Wall Street is bearish on UNH. They think the stock is beaten down, but several super investors they're long, and that's make it very lucrative bet. I personally have a I should make a disclaimer. I have a position in UNH. I think that's a great opportunity of this time, a classic value investing play when the sentiment is low, but all the metrics, the intrinsic value, the quality of the stock signals that it's a buy. So if you think that the stock has an opportunity, has no trouble, and stands its ground on the court with its like battles in courts. I think that's a great opportunity. So let me know what you think of this analysis, what you found the most interesting, and see you in the next videos. Bye bye.